Well, let's talk about some of the opportunities that may exist then, Feroze. I mean, India is currently experiencing an infrastructure investment boom, and naturally all the sectors peripherally to that may benefit, like cement, may get a lift as well. But the question I have is how much of the good news is already priced in, or is this a multi-year tailwind story?
Mandy, you're right. But on the cement, I would say it's going to be a 1 year kind of story, 6-8 month 1 year story. On the long term, sectoral bullishness and structural changes are in IT and pharma. Cement, from our perspective, is a good short term 7-8 month story and a pre-election story. The reason being as follows: because India generally by the first 7 months spends 73% of their fiscal deficit. But this year, we've just spent 45% and penetrated only 45% into the deficit target, which implies a lot of money is going to be back-ended closer to the financial year end. And that kind of infrastructure spending, I think capital expenditure is going to give some momentum on cement. Secondly, the metric ton, 63 to 67 metric tons of capacity is expected to be expanded in India between FY24 and 25, and half of it will happen in 24. So that gives the reason why the capacity expansion is happening is because we are expecting a 250 to 300 bips improvement in operating margins. So I think cement is a good 1 year story. It has the potential to beat Nifty by about 5-7% as a group of stocks. So that's what I think we look at relative performance on our sector choices. But on the long-term story, Pharma and IT do a great job.
Feroze, sorry, I'll have to jump in. We have 2 minutes to go before we hit a hard break, and we can't escape that. So very quickly, do you think this rally that we're seeing in the Indian markets is a pre-election rally given the state election results, giving the incumbent government an edge?
Yes, Tanvi, I completely agree to the hypothesis. If you look at the last 5 general elections, governments or capital markets have loved the fact that there's continuity in government. If you look at last 5 general elections in India, all those 5 have delivered a minimum 10% return even on a 1 year basis. Plus 6 months and minus 6 months, the minimum return has been 10, and there's never been a negative year in those 5 specific years encompassing the election. So I personally think that your hypothesis is true. It's a pre-election rally, and state elections bring in a certain probability, enhanced probability to the continuance of the government, and that's what Indian capital markets love. And thirdly, I think if you look at the fundamentals also in terms of economy are playing out beautifully. If you look at GST, GDP data, IIP data, if you look at the FII flows in the last 10 days, we've seen about $5 billion. So I don't think this is going to shy away. The futures premiums are a great proxy to understand what's the short-term movement. Premiums are at significantly more than intrinsic value. Weekly
Feroze?
Synthetics will also at premiums. So I think it'll last.